Hi folks, and welcome to this video on version 1 of your first quiz. So some of you may recognize this question. The data was a little bit different in the sense that even though it might look the same on the surface, some of the account names are different and some of the additional information is different. In this particular quiz, you'll notice that we had accounts receivable at net, which you know from previous courses means net of allowance, right? And we also had an account here called land held for future use. And when we discussed that in class, we said that if it's being held for future use, it's a long-term asset, specifically a long-term investment, and because we're not using it at this time to help us generate any revenue, we wouldn't record it as part of the PP&E because we haven't really decided what that future use is. So that's important because in this question you were asked to put together the current assets section of the statement of financial position. Now, before we go on and look at that preparation, let's look at the additional information, just as you might have done it when you saw the quiz, and think about where it might go and how it might impact the numbers up here at the top. So we said that the cash account here, $90,000, includes an overdraft of $1,500 held at a different bank. So right away, red flag. Why? And we'll make it red. Red flag because if it's in there in that cash balance and it's at a different bank, we shouldn't be netting it out against the cash account. It should be set up in a short-term or current liability as a bank overdraft. So if it got deducted to help us get to this cash balance, when we're preparing our current asset section, we have to remember to add that back in because it should have never been deducted in the first place. Don't forget, a bank overdraft at its root is a liability. It's just that if it's being held at the same bank as your regular cash account, accountants would normally net it out of the cash balance in the ledger account. But if it's held at a different bank, it needs to be set up as a current liability and not netted out. So if you netted it out, i.e. deducted it, you now need to add it back because it's at a different bank. The other thing many students missed is that you had a term deposit due in 60 days. Well, that's a cash equivalent. So it's not in the cash account per se, but you would have needed to remember to either set up a cash equivalent account in your current asset section or in the first line of the current asset section, refer to the cash account as specifically cash and cash equivalents, right? So you include the cash equivalents in there. And we also know petty cash is always part of cash. And we also had a restricted cash amount that was in that cash balance, but it was held to retire long-term bonds. And the amount of the restricted cash was $25,000. So you know that because it's restricted, it has to be a non-current asset. So it shouldn't be with your cash account in the current asset section. Now, let's look at the next account, or next piece of additional information. It said the accounts receivable balance, which is this guy here at 52.2, includes receivables for consignment goods. Well, we spent some time talking about the fact that consignment goods, because we don't know how much money we can expect to receive until our dealer sells them, we can't include those consignment goods or any receivable on consignment goods. So we know that we need to deduct that from that $52,200 balance. There's nothing wrong with that net balance at net, including the allowance, and there was no information here that would lead you to believe the allowance was inaccurate. So you would have to accept that as being fine. If we look at number 3, inventories do not include $5,000 of consignment goods that were shipped out. Well, don't forget, consignment goods are your inventory being held at another location. So we need to add that back in to this inventory balance of $57,000. So we would add this in on top of that $57,000. And then your last piece of additional information was that fair value through net income investments, $24,000, and fair value through OCI investments, $43,000, $3,000, and $9,000 worth of patents were included in the investment section. So, what do you know? If you're looking at those investments, we can see that these guys would total Okay, to that 76.3. The issue is which one of those investments or any of those investments go in the current asset section. First thing you should know is that patents, you remember you studied patents in a prerequisite course and we talked about it too, that they're non-current assets and they go underneath your property, plant, and equipment as intangible assets. We also know that fair value through OCI investments, we learned in our course, that those particular investments are normally non-current and we classify them as non-current investments. We also remember that fair value through net income investments, and in our case that's $24,000, all right, those fair value through net income get their name because they're valued at fair value at the end of the period, and any gains and losses based on holding those investments run through net income. And those investments we specifically said were held for trading, all right, and those guys are current assets. In fact, if you look at the sample statements in your book, we specifically see that we have investments that are held for trading, and we specifically say they are current assets. So, let's begin to put together the current asset section. Now, when we look here, we see that the cash and cash equivalents, again, I'm making sure that I create a cash and cash equivalents account here to include that $3,000. All right, so that's in there. Notice to get $66,500, what did I do? I added back the overdraft that was deducted from the cash balance. I added it back because don't forget that overdraft was at a different bank. That overdraft account was at a different bank. It's a current liability. It cannot be deducted from cash, so I have to add it back. And then I deducted, because the question told me that $90,000 included restricted cash for a long-term purpose, I need to include that $25,000 as a long-term investment in the non-current asset section. So I'm going to deduct it out of there. Notice I did not adjust for the term deposit because I called this cash and cash equivalents. If a student did deduct the $3,000 from that amount, that's fine. You would have had $63,500, but then you would have had a line here between cash and cash equivalents and fair value through net income investments that said cash equivalents. But in my case, I left it there and I kept the account name as cash and cash equivalents. We learned how to do this in a previous course, so I stuck with that presentation. And that would give me $66,500. But again, it would have been okay for a student just to say cash, okay, here, and have it at $63,500, but then you would have needed to add another line here and put in a balance for cash equivalents, and then you would have had $3,000 in here, eh? Oop, went too far here. Then you would have had $3,000 in there. Either presentation would have been okay. I just added them in as one account at $66,500. So you had to think a little bit more about what your possibilities were and how you'd handle it. Now, if we look at the fair value through net income investments, we just clarified that that's a current asset. I didn't tell you that the carrying value and the fair value, I didn't say there was any difference, so you could just take that as $24,000 as it was given to you in the additional information. Now, if we look at the accounts receivable, just gonna fix this up a bit. The accounts receivable, most students would say, well, how do we get from 52.2 to our net figure, or our gross figure here of 52,000? And the reason why I wanted you to you had to show it at gross here is because I asked you to show the receivable at its gross amount less the allowance. That was the particular presentation that I wanted. So in this case, the way I would do it is I would start with the net balance because that's what we gave you here. We gave you accounts receivable at net $52,200. So we know that in that $52,200 is $5,000 that we included in receivable on consignment goods. We would not include receivables on consignment goods, not at the time we sell them. So again, we wouldn't include them, so we need to deduct it. So what I would have done here is take that 52.2 at net, because that's my net figure, and deduct 5,000 consignment receivables because we do not include receivables on consignment goods. So I would be starting with 47,200. So that's my net amount. I know there's nothing wrong with the allowance balance. It's 4,800. So what number at gross, such that when I deduct 4,800, will I get 47,200? Well, I know that amount would be 52,000. So if you want to do it, maybe I'll just throw up another Word document and actually. That's not working. Okay, let me just do a new document here and show you the logic here in case it's escaping you. I have accounts receivable less the allowance. Gives me my AR at net. I'm starting from down here. That's my starting point. Why? Because I know 52,200 was at net, and I know in that net balance I can't include or shouldn't include those consignment goods receivables. So now I'm here. Nobody said there was anything wrong with the 4,800 in the allowance. So I got that. So this is how I build it up from the back. I say if I'm starting here, or that's my end game, that's where I know because I started with an at net figure in the question. What number, little bit of math 101 here, what number such that when I deduct 4,800 gives me 47,200? Well, if I solve one equation, one unknown, I know that's $52,000. So that's another way you can do that question. All right, so that might help a little bit. I don't know, but you can think about that and then see how you feel, I guess. Brought the wrong thing up there. So now another way you could have come up with this same data if you chose to do this method, and I don't mean to confuse anybody, but I just paused the video for a minute there because I wanted to show you something else you could have done. Some students might have said, well, wait a minute, you gave me AR at net at 52,200. I don't see anything wrong with the allowance. So you could use the work backwards method here just as well. Some students said, well, wait a minute, I would have had an AR balance here of how much? I would have had a balance if I had done this math of 57,000. And some students would say, but I know that's wrong. How do we know it's wrong? Because it should be 57,000 less 5,000. So some students did it this way. Some students who got it did it this way. They said, well, wait a minute, I know it can't be 57,000 because it should be 52,000. So they might have worked it like this. So they might have said, well, making that 52,000 and then come back to 47,200 this way. Either way you look at it, whether you deduct the 5,000 from the net figure to come up with this, or you started with 57,000 based on what I showed you before, and you deducted 5,000 from it to come up with 52 at gross, you're still going to wind up in the same place. So that was that. Now, again, we already said inventory was sitting at 57,000 on the books, but you know you also needed to add in that consignment inventory right here in item 3. So we add that 62,000 back and we get 199,700. Using this current asset amount, and you also knew what current liabilities were, 75,000, you could have calculated the current ratio. We provided the formula for you, but the trick here was that you needed to remember that the bank overdraft was a liability and added into your current liability balance. The fact that they netted it out here means they didn't set it up as a current liability. So when we do that, we get 2.6 as our current ratio. And I also asked you where to put the fair value through OCI investment. I was expecting you to tell me that it was a non-current asset in the long-term investment section specifically. So this concludes our video on Quiz 1, version 1. I hope you found it helpful.